All right, everybody, let's get going. Excellent. Let's get started for today on Tuesday. Let me take out my boys there. Okay. I want to jump into go into really quick what's going on with Bitcoin. Obviously, uh, bigger collapse, bigger check back. We're looking for this check back, right? And I'm not going to spend too much time on it today. We covered a lot of crypto yesterday. But really important to be aware of the fact that we are still just looking for this type 1 reaction to end. And I thought it would be around target 2. And we're sailing right through, 61,823 is what I said yesterday. And I was also saying just if we had a bullish pattern in this area, that would really get us the launch pad we need for the return back up to retest the hop. 1 second here. I'm going to bring over this other screen. So let's just be mindful of that. I mean, it just maybe a little bit more than anticipated, but this is kind of the thing we are looking for yesterday, right? So let's just not get too bent out of shape on it. I still say it's a type 1. And maybe this is one of those looping type 1s. Yesterday also this is the chart I was working off of, just to be prepared for zigzags. And so maybe this is a little more zig than zag at the moment. I'm not too concerned. Bring up our indicators. Look, standard RSI, amplified RSI, way oversold, and HSI oversold too. Both of these will trigger and give you a pretty substantial reading on the 4-hour chart later today, maybe by tonight. And this is the launch pad. This has to be the launch pad for everything that we're looking for. That secondary move, as we said yesterday, we looked at stock to flow and looked at that chart, what those targets were saying, which was, they're still saying 98,000 and then 132 for December. So if that's going to happen, this has got to take shape now, or it's really not going to happen, which would be the first time, period. Not a biggie. Got to be looking, thinking probably opportunity down here, and Ethereum's the same way. Ethereum got, quite frankly, the snot beat out of it. That's a technical term for really knocked hard. This too, just an ABCD up at the top, and I would still say this is like a looping type 1. The interesting thing about this, we covered type 1, type 2. Okay, that we never got our HSI signal down in here, and now we're getting it all the way over here off of this large reaction. Keep an eye on it. I still say looking for these to be retested. Go back to the 886, which is 886 is a little bit something I want to talk about today. But let's just, be mindful of this reaction, crypto reaction, overreaction within the uptrend. Not much else has changed. Let's go to traditional markets today. Definitely want to look at NASDAQ, S&P. We're going to use both the eSignal platform, and I'll use Harmonic Pattern Collection for TradingView. This is available, folks, the software we're working off of, all the harmonic patterns and the numbers and the alignments. This all comes from the work that I've laid out over the last 3 decades, I guess you can say. Yeah. I mean, I really started this harmonic journey around 95. And even though my trading career, I suppose, started in the late 80s, But really my work with harmonic stuff and technical work can all be found in the books. One of the things I want to talk about today is the 886, and that can be found in your volume 1. So just if you're new here, become a basic member, go to Harmonic Trader, sign up, give us your email, and then just go to the basic members page and access all this information. The books are, I know they're kind of old school for today's crowd, but this is the reference point. This is kind of the how-to manual, if you will, for all the videos and everything that I've presented, and everything that we're doing in here is based on these metrics and the framework that was laid out in this volume 1 book. And so again, I think that's important to remind people that we're looking at very specific ratios as the framework within tolerance points, and that's critical because knowing what ratio to be anticipating, respecting what's responding off of what formation, has a lot to do with what you can expect, where the opportunity can be found. So the 886 is really that deep retracement, often used kind of in tandem with the 786, but the 886 definitely more powerful. We use it in the bat pattern, and this came about from kind of a collaboration with a friend of mine, Jim Kane of KaneTrading.com. I haven't talked to Jimmy in a while, but go check Jim out at Kane Trading. I know he's just kind of hiding out, doing his thing, but Jim's got a lot of great ideas, and he went in a direction of like a lot of numbers. When he met me, he was just getting into trading, and we met in that Gartley group way back when. That's something else I should talk to you guys about, because there was literally a Gartley group that talked about harmonic patterns before there were even harmonic patterns. I mean, that was a group that I was a part of. That's where I met Jim, and then some of the 886 stuff, the pattern stuff I shared with him, and the alignments were very early on. And that's where we went from Gartley to bat and crab to butterfly, and really nailed in. The 886 was pretty critical in all of that, and understanding that is a key number of retracement number that I want to look at today. So that's in that volume 1 book. That's in basic members, and access that, go review that. It's such a the 886 is a really interesting number, and we find it in a lot of things that are going on currently. Crypto retesting a lot of 886s on the daily and weekly. In some of the larger markets, we're coming back and doing an 886. Gold's doing an 886 retest of its all-time levels. We talked about that last week. Let's look at NASDAQ and S&P as well. Here we go for today. Let's bring up the 5-minute. Shout out to everybody in the chat. Thanks everybody for showing up. Like I said, we really just got started with opening up basic members and opening these sessions to the public. We used to do this just gold members. And so I've changed some things for the gold members. I will be adding more things, as I said. What I recommend for everyone is to go check out the resources I just showed you and review the information on how to get with the software, because everything you're doing is geared towards utilizing the tools that help us to kind of facilitate decisions and identify the valid harmonics, valid harmonic patterns, as I talked about really yesterday as well. So appreciate it. Let's take a look quickly at, let me get HSI back on there as well. And let's look at NASDAQ and where we are going into, say, next week. We got a holiday week. And then obviously that sets up what should be a year-end run, seasonal run, um, where there's not much here fighting this trend. So let me bring up, there's HSI, and let me bring up regular RSI as well. That's our standard RSI indicator. I don't show that too much because I think amplified RSI does a great job of reflecting the kind of confirmation triggers that we need. But I'll look at all three. This is the eSignal platform, harmonic pattern collection for eSignal. So let's go top down and start the daily for NASDAQ, because after that correction in October, we had just sailed right back. It was just another pause. Bring that up and over. And we're just in the midst of doing another 1618 extension off of that little down run. We caught that correction. We anticipated that correction. And now let's look at, say, the 886, because that is absolutely the target area we first were looking at, what, not even 2 weeks ago? There you go. Oh, let me do this too. It's a lot better. And once we got to this bottom, folks, back in early October, we were looking for the full return to that 886, and we have blasted right through. So the only other consideration, once you do a linear move straight through, and notice there's no W formation here. This last move did not give you a W formation in any way. There's no crab pattern here. And I think that's something to really take note of, because if we had some kind of W formation that had a solid B point, maybe look like something like this. Maybe we had a B point there and then we would be looking at a different creature. But no, what we're looking at right now is actually a fairly what I call impulsive, likely an extreme harmonic impulse wave that should take you minimum 1618. But I'm thinking this is, we get going above this level, this does really look like a straight on shot up. Call it the last dance, if you will. But I'm just thinking extreme targets. Where can this kind of float up? And it might not stay there very long, which is the other consideration, that a fairly strong rally out of that October low. For NASDAQ, the 1618 is at 16,525. All right, with our extreme upside objective, maybe we shoot for that by January up at 18,533. Those would be your two targets. I think if we get kind of like a move we had the last 2 years, you just drift higher. So that's absolutely critical to understand where we are within this whole process. The other thing that I highlighted yesterday, and I guess it was also last week, was the fact that we were oversold in HSI and both amplified and standard. That's standard RSI. Here's amplified RSI, which shows it even better, heading back up into the extreme. So this is a pause. I mean, that's really the way to think about this on NQ. Where are we today? Let me take a look at my platform. Okay, NQ's rallying. They tried to sell it off earlier. We're plus 99 right now, almost exactly 100. Really close to highs of the day. Let me take a look. I'll go to S&P in a second, but just to give you a rundown, S&P's up 23 and the Dow's up 180. So the point being here, we're in a really strong position on the 4 hour, or sorry, the daily chart, that I think with a strong move today, and we're up 100, maybe another 100 by the close. I'll go to some charts here in a minute so we can see if we can jump in on an opportunity. There have been a couple nice patterns already that I'll get into on NASDAQ, but the longer term time frame is not in a position that really shows us this thing is doing anything but continuing up our harmonic scale. And so that is, I would say, target 1618 for immediate an immediate test at 16,525. And then beyond that 1618, we might shoot a little bit higher, maybe call it as high as 17 within that run. I think that's a pretty logical seasonal segment to assess, and then maybe come later December into January you do something like that, all off of this last ditch move. You know, we could do a 1618, go sideways and then up, but this is just to really point out what's going on in NASDAQ and S&P. They've got a real linear move here, real impulsive, extreme harmonic impulsive nature to them. So there's no pattern, there's no bearish pattern developing here. And if anything, the strength, this rally day over day for the last 6 weeks has been quite impressive, to the point where you target minimum 1618 as high as 314. Not, that's really not a stretch at all. Oh, you know what? I didn't even give you guys, here's a risk disclaimer. This is not financial advice. This is all education. This is entertainment. That's what this is. You're being entertained, folks. So if anyone from the government comes knocking on your door asking about what I do, we do entertainment. Okay? And however you use the framework is up to you. Again, thanks everybody for showing up today. We're here Monday and Tuesday, as well as Thursday, 11 a.m. Eastern. Well, you guys laugh about that. But I'm serious. I don't know. Listen, I'm a little concerned about legislation that just got passed, which is really reminiscent of some prior times where they've affected the markets. This one will. If it's 3 trillion or if it's 1.9 trillion or whatever. Okay. And this whole thing that they're going to put breathalyzers in every new car starting in 2025. Are you kidding me? Okay, just chip me now. Let's everybody stick out your right hand. Get ready for the chip. Okay. Chip back better, right? That's why we have to do what we have to do. We have to turn off the news, folks. We have to turn off the financial media and those people. All of them, left, right. I don't care. Are they making you money? No. They're not making you money. Yeah, it's in the infrastructure bill, guys. Check it out. Go look. I've been talking about this bill for about 4 months. This thing is just kind of lucky that they didn't get it all through, because what they were talking about doing originally, would have like mandated essentially like a complete economic collapse, which we still might get. Okay, but what we need to do is look at the levels right now. Trend is going hard. Let's look at the measurements. Where can these go? We're going to get overextended. Okay, that's what we know. These markets are going to get overextended. How far on a harmonic basis are they going to go? And then what's the jump off point? What's the jump off point? Because that's the other thing. Like, I don't really feel people are fully prepared for the fact that, yes, this could be an aggressive move to the upside, but it won't be there long. So part of the strategy is let's lay out the measurements of how overextended this could get. And then let's pinpoint the areas where if it's time to jump off and wait out a nice healthy 50-40% correction, then that's how we do it. And it's only going to take like 10 to 15 months of a bearish storm, if you will. Same with crypto, folks. I mean, crypto's going to be there for the long time, and the hodlers that are willing to go ride the ups and downs, they can do that. But crypto is going to have a capitulation, and then it's going to have a correction, and that's okay. And we're already measuring out where that potentially could go. Same with these markets. And then you got to look at, for those that are interested, okay, you want to look at presidential cycles. You want to look at midterm cycles, classic corrective years in midterm cycles here in the United States. That is the second year of most presidencies. So the presidential cycle's been a lot of great work done on that. And, for in terms of U.S. markets, what we're looking for, be mindful of this kind of stuff. Because, look, we go daily, we go weekly. Okay, we know this thing is, as I said yesterday and last week, I said this last week in detail that, a lot of these tech companies are becoming quasi-government agencies where they just get a lot of money thrown at them. And yeah, no doubt, this can just keep on going. Let me remove, there you go. We can keep on going for a long time, but I do want to show, let's look at it this way. Go to the monthly. Because the monthly too had this whole crazy long-term, this is something I've been doing for the last 10 years, 20 years actually, and I should show, on Thursday, I'm going to bring up, we'll go into volume 2 on Thursday, and I'm going to look at the scenario I traced out back in that book in 2007, calling for the Dow to go to 25,000 or 36,000 by 2025. We're there today. And I'll walk you through that process. But this is all-time NQ chart, okay? Look at where we are, folks. And this is still the scale. I'm going to trace out the scale here. Let me improve the visuals. Okay. Here's how we look at this on any time frame. This is monthly NQ all time. All right. Utilizing the 2000 bear market. And at a minimum, we're now at that 3618 where, yes, we could go higher. Okay, but we're getting very close to a level of extremity where at a minimum, for me, 3618 is it in terms of the scale. Someone asked, I was having a conversation with Terry Tan over in China. We were doing actually something in Mandarin, and he was asking about what number beyond a 3618. And I said, there's no number beyond a 3618. You can get an overextension, but once we get to there, this is all-time NASDAQ NQ. All right, I anticipate a certain type of behavior where this should continue month over month. There should be no reversal bar. You should go on what I call a serial continuation where there's no check back, there's no retracement. So all you need to do now going forward, one, understand how critical that 3618 is. That's an extreme overbought. And the other factor is, okay, if we're going to continue and we're going to do capitulation move, well, you do not retrace. There's no retracing under 14.4. Okay, and then pretty soon there's going to be no retracing under that prior November low at 15.7, and you're just going to keep doing it like that December into January, and then you're going to have a 1 bar reversal that should get that going. So do understand that this is not a sustainable area. It can keep going, no doubt, but we're not there. We're not in a level of value. You're in a level of final acceleration, if you will. So definitely be aware of this scale because it's relevant. And NASDAQ is, this is really what I wanted to talk about yesterday, but we got caught on crypto. But to just be aware of this phenomenon, of a 20-year phenomenon, that this is relevant stuff. This whole harmonic scale is relevant. And I want to show the 886 because the 886 on this all-time chart was a really telling number. That 886 is right here. Okay, all the way back here is 2015. Amazing. It hasn't been that long. You know, we've tripled from here. But this 886, okay, ended up being a pause point where at a minimum you had to respect the reactive price action pause here, where you go sideways for the better part of a year, and then they resumed. I guess that was Q3 at that point. And then it was, and then it was Orange Man. That was the other one. The dreaded Orange Man came in and was going to destroy the world. What a joke. Nope, what happened was Orange Man made everything green. And now Old Man's going to make things red again. Because you cannot continue doing what they're doing at these levels without some kind of major correction. And not even major, but just look at it this way, folks. We need some kind of 382. We will need some kind of 382 correction to resolve the current situation. That's it. You're going to need a pause. That might look something like this. You know, go back to, say, 2010. I mean, that could work. Or even a 236, which is, you know, around 12,000, 13,000. I'm thinking something like that. You're going to try to make a run to 20, and then you have a hard 382 reaction off of this. Whatever resolves off of this extreme 382. 3618. It's a monthly, all-time 3618 where I'm saying it's working really nice along the scale of harmonic ratios. And now you're busting through an area where this should do an acceleration in a final move. And we'll look for that into year's end. I mean, here we go. Even today, look at that. Now what are we? Where are we now? We were plus 100. Yeah, we're plus 98. But that's the plan for going into the end of the year, folks, and there's not a lot of time. Really, maybe 30, 25 trading sessions. For today, you've got that nice crab pattern showing that gives you a 1618 target at 16,396.55. That, not a stretch to think that's something to be considering for this afternoon. One thing I always say and share with gold members about how to utilize harmonic pattern collection for futures, even to get a little directional indication, is what is the last HSI? This is that red indicator, that red arrow, and that relates to this middle indicator. All right, right now we have a little bearish check back, but on the 5-minute, It's coming pretty close to giving us a trigger, and that's something I'll look for into the rest of today. Come down here, give me an oversold. Also, take a look at what's happening on amplified. You're 5 minutes rolling over, but that's going to be an M formation, complex structure. So let both of these come down, and then we'll look for the resumption. Maybe, let me show you this. Let's go to the 30-second chart. If you've never used a 30-second chart or even a second chart, strongly recommend it. The two micro time frames I like to look at are 233 tick. So tick charts are real helpful, and then the second chart. Here on a 30-second chart, nothing at the moment, just that prior crab failed Gartley off of that low. What about a 233 tick? Much the same. They are similar. I think tick chart may be better than from an identification perspective. But let's let that come down a little bit, maybe down to retest this hop, and then we go. Because clearly failed that pattern, both those patterns. Let's jump over to S&P quickly. I wanted to look at today, spend it on the major markets. Let's go to daily. I'll come back to NASDAQ, see if we get something setting up, because again, we're in that CD leg that can keep going. So here's daily S&P, and it's a little bit more W formation than NASDAQ, but still looking at extreme levels like this. Let me bring this. We're a lot closer to the 1618, that's for sure. 1618 for S&P. Bring this. I think it's a little bit higher at 47.42. Now I want to show, I have something on the SPY chart on TradingView that I'll pop up here in a second, but I'm still targeting that level. Let me get it exact, 47.30. Even if this was a crab pattern, not really, but if you took it off of this level there, you would have some kind of a crab. Look for this to hit pretty soon. You're only 30 points away. Have a little bit reaction and then go. This kind of reminds me of Bitcoin, where it's coming quickly to its 1618 on the daily, and we could see some kind of crab reaction that is only a reaction, and then your larger secondary move just explodes. Keep that in mind. I think this is it's going to be a little challenging because it's, people I think are looking for the moon, and you're getting it. I mean, this is clearly strong price action. I just feel you're going to need some kind of 382 here on this shorter time frame, the daily or maybe the 4-hour. Let's go here. Yeah, I mean, this is not stopping. There's just no, every 3-day correction is just bought up. It really is amazing, folks. I've never seen so few corrections in my life. Couple questions. Do you think we might have in a year to come a 6-10 month consolidation to get support level where we can continue to grow later? I do, but I don't think it's here. I don't think it's now. I think what you're where you are seasonally with these markets is in a spot where people People are not going to be trying to short these markets, not going into year's end. You got a lot of funds that are going to need to have positions on their books. And this is the true melt up. And I talked about I did a session, guess it was back in June, where we were a lot lower, and I talked about the melt up scenario, that if it unfolded, how could it go? And for S&P, everything that we really need to consider is just massive, extreme extensions off the COVID crash, which wasn't even a crash. It was a blip. I mean, it was a real blip. But I would look at that in the same way we look at other extreme extensions. Go up to 314, 3618, and start looking at those levels for signs of danger. That's probably the way to think about it. Get up to the structural levels, hit those targets, do your dance, whatever you're going to do, and then give us some signs, some structural signs. I mean, S&P 314 on off of the COVID low is 6,000. And what's stopping it? What is there? What is there that would form here? There's no pattern. This is just a straight shot line. So utilize the slope of that line, and if it stays on the slope of this line, as it has for the last 18 months, you get there basically in a year and maybe 15 months tops. This is a rough guesstimation. That does not assume any kind of spike, major extreme move. And I will dial it back. Let me show really quick kind of the thought process here. Just definitely, let's go to NASDAQ and let's go back to 2000. Because what happened in that final leg was so fast, and this chart doesn't do it because the NASDAQ NQ futures came on in 99, midway through 99, which was also one of the reasons why you got the extreme move. But there it was. I'm talking about something like this, folks, where just be mindful of it as we're writing and looking for this thing to keep going up. We're going to hit structural levels on the harmonic scale that basically say once we see a reversal bar like that with a close underneath a prior monthly low, something like that, that would be it for me. Do you think Bitcoin is going to fall naturally? We looked at that in detail yesterday. We started today's session with Bitcoin. And again, just review, Bitcoin is doing what we thought it would do. And the other way to think about this kind of reversal, folks, when it does happen, is that it usually is the start of some kind of MW thing where you're trying to find a B point. And then once you can find a B point, give you an M formation. Like if it's really going to be a buying opportunity, well, this reversal is the first sign of the larger development, but it happens at much lower levels. So if I was a betting man, and I am, I would say we're like in here of this move currently relative to what we could see at the end and within maybe 2 months, 3 months, and then that's it. We come up and we do a failure, and then we do a 382, a big 382. Is that it could be as high as 18, 19,000, maybe even 20,000, but something like that. That would come later next year, or not long after the new year. It does. These growth cycles repeat, And I think what you're seeing right now is a lot of that stimulus and money, and that's about it. This last push here that they're doing currently, in terms of pure stimulus, is probably the last thing they need to price in, because anything that comes after this, and we're just talking U.S. markets, Nasdaq, idiots in DC, on both sides, folks. Don't get me wrong. I'm not one side or the other. I do not. I have zero political affiliation. I think both sides here in the United States have a lot to be accountable for on where we are, and the fact simply that we are watching our entire economic system get eroded. And the problem is, you don't see it here with this thing going parabolic, and you're not going to see it until the thing does the correction and people really feel that. But that's where we are. You have to kind of understand the structure of how far this thing has come. And I would dare I even say that this larger move, the all-time NQ Nasdaq move, okay, once we blew out that 886, okay, we only had two areas to look at, which is the 1618, and that came in around, what was it, 2013? Let me bring that up. And then where we are now, which is that extreme range. So that was 7,000. God. There's that 1618. And we treat it the same way. That's the harmonic scale. 886 breakout. We saw that in Bitcoin. Same, much like Bitcoin, we're looking for the 1618. And then if Bitcoin goes crazy, it'll do an extreme extension. But for the markets, S&P, Nasdaq, look, we're here in overextended land. And yes, it can continue to be overextended, but the thing we want to look for is that 1 month reversal or that 3-week reversal up at these levels to initiate something bigger. That's the only thing we need to worry about. And it's pretty easy that it has to be a month over month continuation. As long as it is, we will go higher. But the second this thing starts breaking down multiple week prior lows with closes under a prior low, yeah, look out. The DXY long-term view, I really should save that for Thursday, because currencies need to have a thorough review. I'll pop it up just in the chart because there are interesting, massive patterns on the DXY. I've talked about this with Harmonic traders for a while, and this monthly all-time DXY crab pattern, this is off of the eSignal platform, folks. One of the reasons why it is, I think eSignal, of all the bells and whistles they have in addition to our program, is really got everything plus the data. So check it out, please. But the DXY monthly here, are we going to come back and retest 1618? Looks like it, because we had a type 1, and then we've been just banging between 100 and 90. Why not again? There's RSI amplified, both heading back up. So this is definitely still, this dollar strength will continue. That too would be considered starting to head up for an 886. I mean, even if we're looking at a swing 886 off of there, you go back on the DXY up to 100. But we should probably talk about that on Thursday, because yeah, there's a number of these really shaping up. A lot of the currencies currencies haven't been moving for a long time. I would say the action in the currencies for the last 3 years has been horrible. But there's a lot of patterns that have shaped up recently that we should probably look at on Thursday. One or two more questions. Just let everybody know the place to go all right, is to get with this program. This is for TradingView. Why? Because it's got the crypto feeds and most people are working on TradingView. And so, and we can do everything, everything you need to do. The eSignal platform, that is the kind of the high-end model, if you will, but start with the TradingView. Get with the free trial. You go to Harmonic Pattern Collection. Sorry, go to Harmonic Trader, become a basic member, and then get with Harmonic Pattern Collection. And then go through the videos here. I've added some. I'm going to be adding more. There's an entire course that I've added, and then get with the community. So Discord, okay, that's what's happening now. We just started that last week. Click on that link to get with Discord. That will take you over there. Log in, Harmonic Pattern Central, and join in that group. I like it. I appreciate the participation. I think a lot of great people. Yeah, so far 595 members, 154 online. I'm posting charts there. I'll be doing more of that. And then the live sessions. So these are the places to go to for everyone that's new and to learn, especially not only the basics, but stuff like about HSI, RSI, RSI BAM. Yeah, definitely is mandatory. We use HSI, and I'm a firm believer that we use RSI BAM, and you have an understanding of RSI BAM because that's our confirmation strategy we use with the patterns, and that's available in volume 2 right there. Just click on volume 2 and you can learn all about that. These books are, the PDFs are available for free. If you want to buy the physical book, you can go get those, I think, on Amazon pretty much. But, do go through this material. It's all there for you to lay it out, where you take your strategic mindset and you move it from identifying patterns to more of zone analysis and management with the framework that we lay out and we follow, because that's what really helps separate our understanding of reaction versus reversals, how to get the most off of these moves. And again, a lot of that is also laid out in the webinars. It's definitely a lot there for everyone. So we'll come back Thursday. The Discord invite is on the website. You just go to become a basic member first. Easiest way to go. There will be more stuff uploaded to Discord, but the basic members and gold members page, those are our resource pages for patterns, for members on harmonic patterns. So we'll come back Thursday. And again, for Bitcoin folks, this is the pullback I was looking for. Let's see if we can get some kind of pattern development down here. Can I get a crab? Can I get something over the next 48 hours that could really just link up this, confirm this? What? That's Ethereum, by the way, 4,200. Bitcoin. Both of these are where they are right now, should be about it. So I think we come back Thursday. Ooh, that's a nice one. I already see that. Let me see here. There should be an ABCD right off of that Bitcoin. Regardless, I'm looking here. We're at this 886. We're at a swing 886 for the month. Basically 60. Let's see what happens. I'll come back Thursday at 11 a.m., folks. And again, get on the Discord. That's the place to connect with everybody. And if you have questions or want to get started, you're best served there. So until then, see everybody then on Thursday, 11 a.m. Thanks again, and go get them.